Good morning, good afternoon, and good evening to everyone who is joining us today from all over the world. My name is Mia, and I'm a planning member of the China Gulf Forum. It is my great pleasure to welcome you to the Economics and Finance panel of the China Gulf Forum 2021. We are extremely grateful for the amazing speakers who will be joining us today. This panel will be a moderated discussion followed by a Q&A session. You can send your questions to the Q&A box and our moderator will go over them after the panel discussion. The panel will be approximately 75 minutes long, followed by a 15-minute break before the next panel. This panel will discuss the economic and financial effects of the COVID-19 pandemic on the future economic trends in the Gulf region and China. Please allow me to introduce our panelists and our moderator for today. Our moderator, Professor Pablo Hernández-Lagos, is an associate professor of economics at New York University Abu Dhabi. His research interest lies in studying economic forces underlying effective incentives within the firm, as well as global entrepreneurship, peace, and prosperity. Professor Hernández-Lagos holds a PhD from US Berkeley Haas School of Business and also holds a master's in both applied economics and business administration. Media coverage of his work includes the Financial Times on employee compensation and incentives, The Hill and the Times of India on the importance of technology and middle-class markets in India, China, Africa, and Latin America on multinational firms, and many more. Our first panelist is Professor Bernardo Bortolotti. Professor Bortolotti is an economics professor at New York University Abu Dhabi and the director of the Sovereign Investment Lab at the Paolo Baffi Center of Central Banking and Financial Regulation at Bocconi University in Milan. He is one of the leading experts in privatization, state assets management, and sovereign wealth funds. His work has appeared in major academic journals, and he has published 2 books with Oxford University Press. He has advised many global financial institutions and organizations, such as the World Bank and the International Forum on Sovereign Wealth Funds. Our second panelist is Mr. Winston Ma. Winston Ma is an investor, attorney, author, and adjunct professor in the global digital economy. He was a founding member of China Investment Corporation's private equity department and special investment department for direct investing. He has had leadership roles in global investments involving financial services and technology, energy, and natural resource sectors. Mr. Ma has also served as the deputy head of equity capital markets at Barclays Capital, the vice president at JP Morgan Investment Banking, and was a corporate lawyer at Davis Polk and Wardwell. He has published numerous books on topics such as China's digital economy, AI development, and investment. Our third panelist is Mrs. Xiao. Xiao is a partner at NH Management, providing strategic solutions that safeguard control and ownership for foreign companies, investors, and entrepreneurs seeking to operate and expand their business in the UAE and GCC. Previously, in the UK and China, she has worked in banking, real estate, wealth management, and private business sectors for high net worth individuals. She holds 2 master's degrees in internet computing and international financial analysis. Her areas of expertise include strategic planning, corporate finance, financial advisory, and wealth management. And last but not least, we have Mr. Jeffrey Yu. Jeffrey Yu was a business consultant and also an ex-banker from HSBC. In 2009, he worked in JAFSA and DP World to facilitate trade flow between the UAE and China. As a logistic professional, Jeffrey has accumulated extensive experience of providing solutions to Chinese investors. He helped the Chinese cross-border e-com unicorn, Shane, penetrate the GCC market and delivered the first regional mega hub for e-com B2C rapid delivery model. With assistance from the UAE government, he has also helped Chinese firms develop an environmentally friendly circular economy. Jeffrey holds qualifications in finance, marketing, and logistics. He received his bachelor degree of engineering from China and master's in finance from Cass Business School, UK. So without further ado, I will hand over the time to Dr. Hernandez to kickstart the conversation.
Thank you, Mia, for that generous introduction. Thank you to all the organizers as well for inviting me and to share the screen with this magnificent group of intellectuals So we're going to start a very interesting discussion. And we're going to, what I want to do first is to let me know a little bit about the world of the sovereign wealth funds, because we need to start there. It's important that we understand that these are massive amounts of money that are directed by governments all over the world. And I would like to ask the panelists, but in particular Bernardo and Winston, because of their expertise, as to how do they see that these wealth funds, well, first of all, what they are, and how do they see these funds moving the economy after COVID? Bernardo, Winston.
Yeah, thanks, Pablo. Well, it's great for me being here with you. Thanks for having me. It's a nice opportunity to have a very interesting discussion among us. And so let's jump immediately into the topic that Pablo was raising. So what are sovereign wealth funds? We can just take it for granted, but maybe it's useful to cast a sort of definition of what is the consensus, or what is at least in the academic literature and the practitioner discourse, what is a sovereign wealth fund. So we can say that in broader terms, a sovereign wealth fund is a state-owned financial institution entrusted with the management of one country's financial asset. So I really decided, I set forth a very, very general type of definition. As you know, the same definition has been changed over time according to evolution of the funds over time, right? So when we think about one country's wealth, obviously we take it in its broader sense. So it may come in very different stripes. It may be a natural wealth, oil wealth turned into a financial wealth. It could be instead in terms of, as in the case of China, for example, originating from foreign exchange excess reserves. This is another source of wealth. Or you could just have companies, assets in many very different forms. So at the end of the day, a sovereign wealth fund could also be considered a holding company in some respect, as a sort of large financial institution entrusted with the management of different assets. And I was mentioning a little bit of the evolution of the definition itself. So when they start off, the consensus was on a quite strict definition of sovereign wealth fund, especially concerning for example, the absence of explicit liabilities on their balance sheets, sort of pure equity type of investor, primarily invested abroad. You remember the early days of discussion of sovereign wealth fund. Everybody was just freaking out about the fact that money from China or from the Gulf just stealing or taking over the company, the most relevant company in foreign markets. But then this concern has been frankly assuaged significantly with the behavior with the responsible behavior of sovereign wealth fund, and Winston has been certainly one of the players in this game. And but as long as sovereign wealth fund were coming of age, at the end of the day, some liabilities started to emerge, and implicit liabilities in terms of the need to rescue distressed companies, or even in the case of China, well, I don't want to, but Winston will talk about it. I mean, the Chinese investment corporation is a leverage institution to begin with. So they have debt on their balance sheet. So, we have to be flexible. We have to be also agile and smart. We have to try to be smart in the definition of sovereign wealth fund. And I think that a good starting point is this one. So mainly considering them really in broader term as a custodian of the wealth of a nation in its various forms. I think that turning a little bit the page here, another qualifying feature of sovereign wealth fund is a certain degree of independence vis-a-vis the other bodies of central administration of the states, especially the financial, central bank, the Ministry of Finance, or other public institutions. They obviously they comes in different forms. They have different governance arrangements, but some form of shielding, some form of arm's length relation between the management of the asset and the ownership of the asset is to some extent required to have to display an efficient organization, an efficient management of the assets. So I will stop here because I'm also, I mean, I don't want to, well, we can just, you know, if I start talking about sovereign fund, I could just keep on talking.
Sure.
But I want to share also the time with you guys. So I will stop there and then I will be able to.
Sure, Bernard. You know, obviously you teach a course about it, right? You have enough to chat about it. So let me just, you know, I can just put some concrete examples to what you just covered. You know, like, you know, for the audience today, right? You know, to put the topic in context, here's a quick question. You know, who holds the power in the capital markets? You know, for many people, they will think about the glamorous investment banks like Goldman Sachs, Morgan Stanley, and also related to Jeffrey, right, HSBC. Or people will think about the large asset managers, which host obviously lots of investments like BlackRock, Vanguard, Fidelity, right? or some people think about the mysterious hedge funds like the Bridgewater or like Anthony Scaramucci's Skybridge, etc. Right? But in the world we're living in, you know, I'm pretty sure Bernardo and I would agree. You know, we think the sovereign investors are the ultimate asset owners in the market, and they are the ultimate capital source for the capital markets. And in my mind, you know, looking from the China example, right? Essentially three categories for that sovereign investor concept. One is sovereign wealth fund, which is like CIC, which I used to work at, which manages a portion of China's foreign reserve. And another is the national pension. It's also run by the government, you know, provides a pension for the 1.4 billion people, right? And another one is the central bank's investment arm. It's called SAFE, State Administration of Foreign Exchange. It manages the lion's share of the country's foreign reserve, and it's one of the largest holder of U.S. Treasury bonds. So it's essentially China, you know, through China's central bank, you know, China is one of the largest creditor to the U.S. Right? So with these three groups, you know, you know, for UAE, you have also similar sovereign investors in these different categories, right? You can ADIA precisely in Abu Dhabi, right, is someone very similar to CIC, and we see each other in the market a lot. And so when you look at all the countries in the world, right, many countries have these sovereign funds in different categories, and they are increasingly active. So again, to put into context, when I first encountered the sovereign fund was 2008. CIC was set up, global financial crisis, right? There's one of the first investments by CIC was investing into Morgan Stanley, which was about to bankrupt. Yeah. And for Citibank was also about to bankrupt, and the sovereign funds in Singapore and the Middle East put money to rescue it. You know, that includes Kuwait, KIC, and as well as ADIA from Abu Dhabi. You know, that was the time that sovereign funds starting to become active, and they started, you know, directly investing into companies, and they started in the financial sector, right? And now today, the frontier is tech investing. And in my new book, The Hunt for Unicorns, How Sovereign Funds Change the Investing in Digital Economy, you know, I look at these sovereign funds as the new venture capitalists. So their impact is now everywhere in every sector. Yeah, back to you, Pablo.
Wow, both of you gave me so much to talk about, so I have to keep it short, but I have a lot of questions now. So how big are these? Because you claim that they are so important that they drive the economy, pretty much the capital markets. So how big are these? I know that, you know, that is a very interesting topic of research as well, but can you tell me the size of these funds?
Yeah. So, well, the precise size, it's so defining the exact size of asset under management, it's a little bit more an art than a science, because, for example, as just Winston was mentioning, there are different types, and according to the definition, you can just enlarge or reduce the scope. But if you, for example, take a quite broader definition, like the one that I gave you, which allows you also to include SAFE, so the State Asset Foreign Administration, the central bank basically, and the National Pension Fund, you end up with a ballpark figure of $7 trillion US, as we speak. This is the most recent aggregate volume of asset under management by all sovereign wealth funds. Yes. It's huge. So if you think about, it's about 10% of total asset under management in the, let's say, global, among global asset owners, right? So it's not huge, but you know, what is amazing, it's the spectacular growth of this new type of asset owner. So imagine that this wealth was created in less than 2 decades. Well, for sure, the very first sovereign fund was Kuwait Investment Authority, established in 1953, right? So even before the country became independent from the UK, but that was an exception. So the bulk of the accumulation was since 2000 onwards, and any other asset owner around the world in global financial market had anything similar trajectory in terms of asset growth.
Let me follow up on that. Thank you, Bernardo. That's a huge number. Actually, we are now used to talk about billions and trillions, but $1 billion is thousands of years of work of anyone with a professional job. So $1 trillion is 1,000 times $1 billion. That is, you know, we think that we comprehend, but if you try to count $1 trillion, you will need more lifetimes than actually a lot of the humans that have here in this audience combined can use to count. So $7 trillion is a lot of money. And then I want to connect that to what Winston said about that the sovereign funds are the new VCs. That's also a bold statement, Winston. I read your last book, the Digital War. Maybe we can talk about that later when we talk to Xiao and Jeffrey. But you said something that is very bold and caught my attention. So Bernardo said this is a big 7 trillion assets. But you're saying, yeah, but these assets are going to go into a risky part of the spectrum, which is venture capital. Can you tell me a little bit more about that? Because that's very
exactly, Pablo. You know, part of the reason is that the sovereign funds these days have multiple objectives. You know, obviously they behave as investors, but they also try to put money into strategic sectors that can be helpful for their domestic economies, and that's really relevant to the Middle East region because these, let's say, carbon fuel-driven economies are really kind of eager to transform themselves into technology-driven economies, right? That's why we see all the sovereign funds are becoming the new venture capitalists, and the most prominent ones, not surprisingly, are the Middle East guys, right? Like the 100 billion Vision Fund, right? The largest VC fund in the world. Is mostly financed by 2 sovereign funds in the Middle East, right? The Saudi Arabia's PIF and UAE's Moderator, which is also in Abu Dhabi. You know, again, to put this into context, right? A typical Silicon Valley VC fund is about $100 million, and for the Vision Fund backed by the 2 Middle East sovereign funds, it's a $100 billion, right? So with 1,000 times the size, of course, it's changing the game of VC. So I stop here, Pablo, and we can connect this discussion with the Middle East digital transformation.
Yes.
Yeah.
So let's do that as the same way, because it's very interesting what you're saying. And now I'd like to talk about creating jobs pretty much, because in our audience, we have a lot of students that probably are thinking whether to stay in the United Arab Emirates, go to China, or go elsewhere to find jobs. So I would like to see whether there are practical investments or actual investment that you can connect from China to the UAE and vice versa. And for that, I would like to invite Xiao and Jeffrey to talk about their experiences, because they have been on the ground helping businesses to come to the UAE. And And the challenges, you have the money, you have made a great case about the money is there, but this is investment money. Then you have to implement the projects. So how does that translate into actual investment? And the second question would be, how does that translate into jobs and a knowledge economy thriving in the United Arab Emirates? So I would like to start with Tao and then Jeffrey. So if you can give us a view of this interesting panorama.
Thank you, Pablo. I would give an example. I said like one of the projects we're working on at the moment. So we're talking to Adio about this project. The projects come from China. So in the process of the discussion, what coming up is Adio will support the project, come to UAE, set up here with a rebate. The rebate will come as the employment, like they will give the firm the project money back after the setup in the UAE and giving local jobs. So that's one of the ways how Adio could kind of encouraging and help local employment. That's from my ongoing right now project experience. I think Jeffrey will have a lot more to input in this one, because Jeffrey worked with Adio a lot as well.
Yeah, so when it comes to materialize these the cash flow or the investment into the country, and especially from China, we observe that a lot of money goes into, as probably everybody aware, that a traditional asset which is quite favorable for Chinese investor, which is property. But then that does not translate any jobs to the market. However, the big chunk of meaningful money, which is into the real economy, now we start to see a lot of investment into factories, into different type of manufacturings, and also some of the knowledge-based economy. For example, recently we have another Dubai-based company named Yalla. They just finished the IPO last year, in the end of last year, in New York Stock Exchange. That company was into the social application development, etc. And we also see the e-commerce platform. Probably everybody aware about Amazon.com, New.com, who's quite famous in the region. However, we probably cannot underestimate the Chinese element, those unicorns. For example, Shein. I'm sure almost very, very rare Chinese know about what is Shein, but these companies literally coming from China, they sell those fashion brands, those female items, etc. And we have another brand named Jolly Chick that is a platform, e-com platform as well. So those are the growing trend, especially coming from China into the real economy. They try to grab their market share. At the same time, they start to contribute the job opportunity in Middle East. They tend to hire the different type of professions, logistic professionals or marketing professionals, especially when it comes to the e-commerce. They require a lot of marketing professionals, a lot of AI related experts, because nowadays the e-com marketing does not relate to any traditional pattern. Now they require a lot of AI technology into the playground. So that's the trend that we've been observing in the recent years.
Yeah,
well,
may I add in?
Yes, please.
Yeah, Pablo, thank you.
I'm gonna leave the conversation to you because I have questions about that. So go ahead.
Oh, perfect. Yeah, because Pablo, what Jeffrey was talking about relating to some of the UAE sovereign funds investing into Chinese unicorns and helping their expansion into Middle East, at the same time creating opportunities for the local people in the Middle East, right? So I think these will be very interesting examples. First relating to AI, one example is Chinese AI company SenseTime. It's about facial recognition mostly, and as well as other AI technologies. And its main investor is Mubadala, the sovereign fund in Abu Dhabi. And even more interestingly, after the investment, right, SenseTime set up a AI research center, in Abu Dhabi. It meant to be this AI center for the MENA region, you know, covering Europe, Middle East, and Africa. So it's a very good example of sovereign fund investing in a foreign tech company and then also connect that foreign company with the domestic economy. Another example is another AI company, you know, called Megavii, or it's also known as Face++, you know, partially owned by Alibaba. You know, it's used for facial recognition in mobile payment. You know, you can smile to pay. You know, and for this company, it also has a UAE sovereign fund investor, which is ADIA. Yeah. And I would want to think that, you know, when ADIA invested in Megavii and developed this partnership with Alibaba, it also wanted to help developing the mobile payment system in UAE, and also connecting connecting cross-border e-commerce with Alibaba. You know, I'm pretty sure every year in the Singles Day, November 11th, you know, there's a shopping extravaganza, right? You know, lots of buyers, sellers, merchandisers, brands, you know, in UAE also participated in that global shopping festival, you know, and using the Alibaba platform and its mobile payment and related facial recognition features, etc. Yeah, Jeffrey, you know, you probably have seen these things happening, right?
Yes, that's very significant change in the market, actually.
So let me follow up.
Pablo, can I just add a quick note to that?
Please, go ahead.
So I think that what Winston was mentioning with very concrete examples is extremely interesting. So the role of sovereign wealth fund in this type of deals is exactly unlocking for a foreign target company the local market. So it's totally win-win. So the investor gets significant returns out of a profitable company, and at the same time, these returns are unlocked through a easy or better penetration in the home market of the fund. That happened very much in Singapore. That is happening as we speak. There are several examples in the UAE. I would say the UAE is very relevant. It's one of the best practice in this type of not just, so we are not just talking about financial returns, or better, we are talking about financial returns unlocked by better access to the local market. And I think that this type of, if you want, you can call it also economic diplomacy, because it's a policy issue at the end of the day, is very well performed by sovereign wealth fund. And it will become even more and more important in the future with in the digital economy, with that we are very experts.
So
Bernardo, I just want to.
That's very. So let me just say one thing, Jeffrey, and I want to hear your thoughts on this actually, because if I can summarize what the three of you said and four of you said, sorry, is that there is flow of capital both ways. There's flow of knowledge both ways, because I like the term that Bernardo used, unlock the possibilities. So the flow of knowledge, you know, you don't need to go physically there. So Jeffrey, given your expertise, how does that translate in practice to Abu Dhabi? The flow of knowledge, the working in Abu Dhabi for companies in China, and companies in China working in Abu Dhabi. How does that translate, given your expertise in practice?
Well, give you a very latest, very fresh idea, which also try to prove the idea which Professor Bernardo just raised. Recently, another sovereign fund backed the company named G42. They start to work with a Chinese state-owned enterprise named Sinopharm, who is the producer for the vaccination. So now what they've done is they start to work together and are putting up a vaccination plant in Abu Dhabi. And then that gives Abu Dhabi capacity to produce a local produced vaccine for the local consumer. And then from there, and then hopefully they can start to help the neighboring country as well. So in these deal or in this type of cooperation, Sinopharm provide knowledge, provide expertise, provide all kind of technology support, And then G4D2, they start to contribute the funding, they provide all the localization procedures, and also provide any kind of support to giving the green light. Bear in mind, they have a very short timeline to materialize the project from a sand, because in Abu Dhabi, they find a piece of sand and then start to construct a factory, a medical grade laboratory, medical grade factory into reality. They have mandate within 6 months, these need to become a reality. So that is how the level of work now is happening within China and the UAE.
That's impressive. That's really, really encouraging. These are the kind of initiatives that we need. And why do you think that it's, well, the urgency requires this deployment so fast, that it has to be fast? But how do you see examples like this one will happen in the future after COVID? Do you think that this initiative or this mindset of urgency will stay there? And if so, in which sectors? This can be for anyone. I guess I would like to start with Winston because he has a work on AI, but then I would like to talk about this with Xiao, Jeffrey, and Bernardo to give us the big picture everywhere in the world.
Sure.
So Winston.
Sure, like one aspect to look at this post-COVID thinking is that because of the pandemic, a lot of the activities are moving online. Yeah. So therefore, this digital transformation is accelerated, which means, for Middle East economies, as I mentioned, right, for these carbon fuel centered economies, this urgency to move into a digital innovation driven economies is getting bigger. It's getting bigger because now this digital transformation is accelerating and more activities are going online, and that means for the government, they have to focus on two things. One is the digital infrastructure for the economy, and at the same time, there's a digital ecosystem to cultivate innovation in the domestic economy, right? And right now we're seeing sovereign funds are doing these things all together. And again, a great example is Mubadala, the sovereign funds in Abu Dhabi. Among other things, right? They also behaved as the main investor for the innovation industry park in Abu Dhabi called Hub 71 AD. Yeah, it looks like a real estate. It looks like a real estate infrastructure investment, but it's industry park. But at the same time, it is also cultivating an ecosystem for domestic innovation, right? With Hub 71 AD, it had partnership with large international players like Microsoft, and of course, thanks to the $100 billion VC fund, Vision Fund, they also got a SoftBank as a partner. Masayoshi-san, is a keynote speaker there, right? So you can see these type of industry park, Hub 71 AD as example, to come more, throughout UAE as well as Middle East.
Excellent. That connects very well with Jeffrey's, because as Jeffrey described, when you come and set up a factory out of nothing, it's not only money, it's knowledge, but it's also people coming in. And these people will have to interact with other people, maybe scholars, maybe academics, maybe lawyers, and that creates an ecosystem. It's a fascinating concept, because we started with money, with a lot of money, and now it's creating an oasis in the desert. So Jeffrey, have you seen other projects other than the Sinopharm factory that is doing this industrial park?
Yeah, I want to share some of the observation in the field that rather than these type of cooperation from UAE side, we also see the growing momentum goes into the agriculture, as well as the medical care, etc. So when it comes to agriculture, everybody knows the UAE has harsh natural environments. It's very difficult to grow any vegetables or any crops. So the government realized that in order to have proper food security, having something produced locally is something must, because previously they invest into Africa, invest into East Europe, to secure the farmland, secure the food supply. However, when something like pandemic happens, the country's customers from other foreign countries, they can ban your import. They can stop your import because they try to supplement their local demands. So the UE government starts to think that we need to do something locally. That's why they start to work with the Israel government as well, bring in the Israel technology, bring in the Chinese technology. And now a lot of money has been put into the vertical farm. Probably if you notice that recently the US agri-tech company AeroFarm start to implement their technology, start to bring their expertise in the region, start to grow at least from the table salad. That's the start, the point of start. And then it start to grow. Now they are trying to grow the blueberry, cranberry, etc. Try to diversify the food supply. So this is a very interesting development in the field at this point in time.
Excellent. It's amazing. Tal, have you seen anything like that?
Well, we follow kind of in the private sector, we follow the government, kind of policy guidelines. We follow the trend. So it helps a lot when we had a lot of meeting with IDO before, and they really clearly telling us, what sectors are they're investing in. So, for example, agriculture, we just mentioned, manufacturing, which the UAE government is promoting to be made in UAE in 2040, I believe. And there's a healthcare, there's education. So there's a very clear which sectors they will invest in. And when we approach our clients, if they are in those sectors, we are very excited because we know we can talk to the government. With the government backup, is make the coming to this region become much easier. And also the client, when they know the government is behind them, they feel more confident to come in because they don't, they know they're not just putting all the money in investment and they're facing the harsh market. They will have the government behind them and give them all the support and all the leads. So that make our life much easier.
Oh, I see. So you're saying that Bernardo, I want to ask a question to you now. So let me just summarize what I understood. And if you need to add something else, it's better. But this question is for you, Bernardo. So I've seen that the industries in which this money and this knowledge is flowing is healthcare, Sinopharm is a good example, agriculture, very interesting example because food security is one of the top priorities both politically and economically. We have seen manufacturing and education. Bernardo, how do you see that? Are these the trend all over the world? Well, in particular with China and the UAE and all over the world in terms of the investment of sovereign wealth funds? Or there's something else that we can introduce here in the UAE?
Yeah, this is a very tough question, Pablo. It's very.
That's why I'm asking it to you.
Let me just put a little bit in a broader perspective, which is the typical strategy in which academics bypass it. No, all jokes apart. No, I'll certainly provide an answer. But I think it's interesting. What it's very interesting to note, if you look at global sovereign wealth fund investments, two different trends, opposing trends, especially if you think about China as the home country so we have Europe and the US raising barriers to Chinese investors. So we have just 2 days ago, in Italy, we have just blocked an acquisition of a chip company by a Chinese acquirer. And that is happening also in the US. So you have the West, which is raising barriers to foreign investors across the board, and particularly from China. And we are seeing exactly the opposite in other geographies, especially in MENA region or in Abu Dhabi or in the Gulf, where indeed Chinese companies and sovereign wealth funds or large institutions are really are able to grow the pie locally by creating returns and job opportunities across industry. Obviously, the starting point are the strategic sectors of the host country, So we've been mentioning food security, healthcare, artificial intelligence, where this type of investment are mostly needed. So the question becomes, so what is explaining these two diverging trends? Is a matter of IP protection? So we have to be candid here. I mean, the geopolitical world has changed dramatically over the last years. We have to face that. And the West is going a given direction, unfortunately, whereas we see the other part of the world, China and the rest of the global South, let's say, growing or just approaching or embracing a different approach to foreign direct investment. So one way could be, well, it's a matter of IP rights. It's a matter of better protection of IP rights in some geography, or it's a matter of trust, or it's a matter of economic fundamentals. So when economies are retrenching because they are just stagnating, you become much more, let's say, risk averse. You become much more jealous of your own economy. Instead, if an economy like the UAE is growing or is expected to grow amid difficulty, you might be more open to cooperation and collaboration, also concerning the IP rights. So I don't have a clear answers, but I think that this is really a very important topic to deal with. How can we learn, maybe, how from the West, how the West could learn from what is happening and what is happening now in the UAE, for example, with those exciting win-win solutions which have been put in place, and how can we unlock the same opportunities in more mature economies. So I think that this is a very important topic to deal with.
Thank you, Bernardo. So now that the big picture is getting very clear, so there are investments that are really targeted to particular industries because of the urgency, because of the emergency, also because of strategic planning. But also we are seeing a geopolitical shift in, I would say, AI dominance, AI supremacy, or other technologies that need to be global in order for them to work. I was reading, I think this is from Winston's book, that China needs other faces from the world so they can train their algorithm better. Is that from your book, Winston? So
yeah.
That is
talking about the
fascinating.
diversity of data, right?
Yeah, exactly. So we need, the word globalization is a word that has been used for many years, and it may mean many things for different people. But I want to talk about the things that we care about, which is knowledge, peace, prosperity coming from and to China. And when you think about what Bernardo said, that there is an asymmetry in which some countries are closing and others are opening. Is that something that we can leverage on in the UAE? Is that something about the mentality that we can use for the benefit of people, more jobs, more technology, better and more diversified economies? Or is something that is going to go away as the pandemic recedes? What do you think? Is this an opportunity or just a fad?
Great point, Pablo. Again, right? This is about this urgency and emergency, because we all know that AI is driven by data to a large extent, and for that kind of data economics, there's a network effect, and there's also economics of scale, right? So which means the larger AI economies, can probably will get to the lion's share of all the benefits. That's probably the reality, and that's probably the reality, and that's probably is the most kind of the pressing issue, right, for the smaller countries without much resources. Right now AI is very much a China-US competition, because the more data you have, the more training you can have, right, for your AI algorithms, and that makes your AI algorithm better. The better it is, it gets more users, and then it gets more data, and the cycle goes on, right? And so that's a worry that for smaller countries, they will lose out in this AI-driven economy, or less broadly said, data-driven economy. So naturally, you know, for many countries, they would say, you know, data is the national treasury. I need to be closing so that I have to protect my assets, right? But you know, at the same time, you know, I think the China-US or broadly China-West tension may create opportunity for these emerging markets. You know, relating to your earlier point. You know why? Because right now you just don't see global companies between China and the US. Yeah, Google, Amazon are big in the US, but they're not in China, right? And Alibaba, Tencent, you know, are the giants of China, but they have no presence in the US. And as I think for global digital giants, whether in the US or China, the next billion users are in the emerging markets, you know, in Middle East, in Africa, in Latin America, so on and so forth. So in that kind of context, right, you know, places like open-minded places like Middle East, in particular UAE, you know, seems like the oasis in the global tension, and which may actually create opportunities for the local economy, because for both China and the US, they have to look at Middle East, UAE as strategic markets to grow for the near future. Yeah.
Thank you, Winston.
Yeah, I like very much this metaphor of the financial oasis ecosystem, financial and economic ecosystem in the UAE. Is not rhetoric, is real, is something which is going on. In spite of all the geopolitical tensions, probably that's a quite unique place in which this kind of positive arbitrage, how can I say, arbitrage opportunities are really exploited to the benefit of both parties. And yeah, for sure, I think that the race will be on emerging markets. So we have two big superpowers of US already technologically very much advanced. So we have US on the one hand and China on the other. And so the race will be for emerging markets. Proximity, so Pablo, we'll see Latin America again connected to the US, but I don't know, it will be more difficult for the US to tap successfully the global South, centered around, you know, our part of the world, Abu Dhabi and the region. So I think that's a fascinating topic. So because indeed we have to be candid. I mean, there is a trade, there is an economic trade and technological war unfolding. So it's in the press, it's there. We have to confront with it. So we in Abu Dhabi are in a very privileged position to be quite independent, third party, not be engaged too much. But certainly we are seeing a lot of presence from China, and probably the comparative advantage of this country, of Abu Dhabi I'm talking, is being a global financial hub and gateway itself for investments in the global South, in the so-called Mihaza region, Middle East, Africa, and the South and Southeast Asia. That's my point. So who will be able to successfully tap the new emerging frontier markets will win the game. But it's certainly it's not going to be a next step. It will take time, but the challenge is there. It's out there.
Very interesting. It's very interesting, and it's, you know, it's amazing that we are fortunate to be part of this middle. So take the middle from the Middle East. You are in the middle of the world, not only the Middle East. It's amazing. So I want to, in the last 10 minutes that we have before we go to the Q&A part, I would like you, all of you, to give advice to the young people that are listening to your interventions. What would you say in terms of where to look for a job, what to look at, what types of businesses or industries should they focus their attention on? Imagine that these are individuals that live in China, live in the UAE, and also have markets all over the world. So what would be your advice to the young people going into the job market or deciding to change jobs at a very early age? Let me start with Tao, and then Jeffrey, and then Bernardo, and I will conclude with Winston.
Okay, that is a very big question. And actually, I was recently giving advice to one of my friend's daughter recently. I think from my point of view, I would probably say be good at whatever you do. Like just, I don't think there will be like advice saying, you know, which sector you should go in. You know, things change and we cannot predict that. Like back then, I studied IT. My graduate, my first master was developing app back then, and I didn't like it. And I quit it and I went to banking because investment banking was very trendy back then. And it was a great job. So I went in, and when I got into job, it was 2008, which is financial crisis. So I went into investment banking in financial crisis. So it wasn't a great start for my changing my sector. However, you know, I did fine. I worked in different banks, and now I'm in the consulting field. You know, things worked out for me. But if I kept my first master, which is developing app, I could be doing great right now as well, because it is turns out the app is the thing like 10 years later. So I would say probably if you are interested in something, it has to be something you like, interesting, and just being good at it, because the things change. I cannot tell you what 10 years later, what will be in trendy. We're talking about the AI, we're talking about, you know, everything about going in e-commerce, digital, everything. 10 years later, that could change as well. So I cannot tell you, say, go into that. So yeah, but just be good at what you do. Like keep the passion. Like if you want to do something, you need to have the passion for it. If you hate something and you force yourself to do it for life, that's for life, then don't do it.
All right. Thank you, Tom. Thank you. Jeffrey, thoughts?
Well, yeah, I actually have completely different idea of given the advice. And according to my experience, China for the next 10 years still will be the good place. And it's a wonderland for the adventure. If you have ambitions, you have you want to try something new. Obviously, China. China now, in my view, it's become like US. You know, 20 years or 30 years ago, like ex-US before. So it has that environment to test and try something new. However, bear something in mind. If you put yourself in China, be aware that you are facing very, very tough competition. That's where the momentum comes from. So you don't expect that you go to China and then enjoy life and then you expect something good come out of it. You go to China, it has a fantastic infrastructure. You will get a lot of support from government, from the private sectors, but you need to work really hard and then you need to get something out of it. But then if looking to some different, you know, aspect, you want to have a peaceful life, you want to have a linear development, and then you want to have a stable, you know, income, etc. UAE will be a very good option. That because now everybody can see that UAE is in the growth channel, and then a lot of business opportunities start emerging, and then you don't need to be that much, you know, scratch your head and break your head and find a new business idea. You can implement some mature idea from China or copy some mature idea from US and then start to put it into the new scenario, business scenario in UAE. And then you start to have your business over here, and then it's another good trial for such. In addition to that, UAE has a fairly good job market because the pay is slightly higher compared to other regions, and then that become an easy access. But then be aware, once you get into this route, you will be getting addicted to it, and then it's in the later stage. For example, if you've been in UAE for like 5 or 10 years, the opportunity cost for you to shift become much higher because you get used to the environment of this you know, large hotel and then fascinating living environment, etc. So that's sort of a conflicting idea, but then each way has its unique you know, angle or different lens to look into it. So in the end of the day, it's back to you, and then what is the most suitable for your individual situation.
Thank you, Jeffrey. Bernardo, what would you say?
Well, I have 2 teenage kids, so, you know, it's like So I would like to give a few very practical advices to I don't know whether we have students around listening. Follow your passions, sure, but never make your job out of your passion, because 99% you're gonna fail. You're gonna be good in painting, you're gonna be a good violin player, you could be a good soccer player. 99% you will not be Maradona, who will not be able to live out of it. So keep alive your passion for your free time and leisure. Don't try to make them your job. You are incredibly gifted, but this is really a measure of, probability zero in economic terms. So this is one. The second advice, study math. Study math. And then when you're done, study math again. It's incredibly useful. Do something difficult, and math can be very difficult, or hard sciences. Devote your time in this. You will never regret this type of choice. And also learn something strange. Learn a second language. Study Chinese, study Arabic, study something awkward, study Japanese. You mentioned it. We will keep you in touch with a new culture. Will open your mind, and you will have something interesting to add in your resume. I stop here. So
thank you. Very good advice.
Sorry for being a bit blunt, but that's the way in which.
No, that's what we need at this point. Thank you very much. Winston, what are your thoughts?
Terrific. First of all, I fully agree with Bernardo on the math point, because before I become a happy lawyer banker, right? My undergrad was semiconductor physics, so silicon devices. So I certainly think study math, physics prepares someone for this compressed world, because when you look back, right, you'll find the math, physics are the simplest one. That human beings are much more complicated, but it's a great preparation for you. Now, since this is the NYU event, I would say, really, the advice is, to take advantage of the NYU community. I'm not joking, because all my career started, my NYU experience, right? One thing special about that NYU experience for me, after NYU Law School, I became capital markets lawyer and then banker, is that I think NYU is particularly strong on taking in new contents from international sources and industry sources, right? So for example, on the sovereign fund topic, Bernardo is teaching at NYU AD, right, from an Italian background. And I'm teaching an adjunct professor course at NYU New York, out of the China background, right? The interesting thing is, we're both international faculty, and at the same time, we're teaching a course that you just don't find elsewhere in other Ivy League universities, because we're very practical, very international, right? So I think this NYU community provides you this global perspective, not only on campus but also after, because if you look at the setup, right, it's very strategic. It's NYU Shanghai, NYU Abu Dhabi, and NYU New York. So Abu Dhabi is the 3 portal universities. So I really think, especially for NYU AD, it's such a strategic place to connect both East and the West. I think, NYU community is really this global perspective place that we can all take advantage of. Yeah, lifetime learning.
Yes. And actually, that's a very, the corollary of what you said is, leverage on your connections within NYU. So if you are part of NYU in any sense, try to connect to your fellow students in Shanghai, New York, and elsewhere. Now, Jeffrey mentioned Israel. Probably you must go to Tel Aviv and see what's going on there. So NYU has a campus there. So excellent. So I have a few questions from the audience. I am taking notes. So I have questions about all the topics that you're experts. So I will allocate them that way. So the first question that is very interesting. It's probably a basic question. We're going to go away a little bit from knowledge and job markets as of now, but it's also very relevant. And the question is, I would start with Bernardo on this. How do you see sovereign wealth funds divesting away from oil into renewable energy production technologies? Do you see that, or is that something in the press that is not happening? What do you say about that, Bernardo?
Interesting question. It is happening, but with a twist, I would say. So so if you look at the data, if you look at what are the extent and size and amount of investment capital from sovereign wealth funds into, for example, renewables, you see some funds significantly invested in these sectors. So, and again, not to mention, but for example, Mubadala or funds, some funds in the region have some large-scale investment programs along the, let's call it, diversification energy type of dimension. But for sure, if you put yourself in the shoes of a country rather than a sovereign wealth fund, well, there's an elephant underground, which is the oil that you have. And you don't want then oil to become a stranded asset too quickly. So you want to, so the transition toward energy in some countries, I'm thinking about Saudi Arabia, for example, which is certainly the most heavily invested in a given sector, has to take into account that incentives are not completely there for a full-fledged transition out of oil when you still have the elephant underground. So the idea would be to start thinking about a transition or energy transition out of oil, but with a grain of salt that you cannot just leave the economy or immediately jump to a different energy paradigm without thinking at the deep economic implication of your own country. So in this trade-off, treading this trade-off is very difficult for government, and that's why we see, for example, Mubadala so aggressively investing in renewable, because the country itself is so resilient. So we have already here 1.5 trillion of wealth in store to begin with. Other countries have not been so successful in accumulating this large-scale financial wealth. So they will be probably a little more reluctant in embracing energy transition.
Thank you, Bernardo.
This is a...
Thank you. I have another question. I will ask this to Jeffrey and Xiao. So what are the challenges of the UAE market? I assume that this refers to the whole market, but let's start with the job market, and then we can talk about the consumer products market. Do you see any challenges that are worth starting to understand now or not? Let me start with Jeffrey and then Xiao.
Okay, when it comes to UAE job market, the typical issue is for the company, let's say from the corporate perspective, one side, it is very difficult to hire the skilled laborers. You typically need to go to India, we go to Southeast Asia to find the laborers to help for your production, for your operation, and then the cost associated with the labor is another issue for the corporate, because now UAE has made manufacturing as their future development. In order to have that vision to be realized, maintain the human cost at certain level is a big task. So when you look into the salary range for the laborers, you have these unskilled portion, which is fairly okay compared to China, compared to other regions. You still can maintain that level. However, when it goes to, for example, sales, mid-management, or even higher management, their salary becomes exponential higher compared to the minimum wage laborers. So that is the challenge, which is hindering the corporate to develop their strategy, and also the availability of the knowledge, because many knowledge are imported from other countries, and then with the limited supply of the talents locally. So that's one of the area government putting a lot of efforts to boost the local knowledge, to boost the local talent. So that's one of the reasons why why you in Abu Dhabi has become quite important in this area. So that's one of the challenges when it comes to job.
Thank you. Thank you. Tal, do you have any thoughts on the challenges?
Actually, on this one, I very completely agree with Jeffrey on the talented worker. Jeffrey talked about the personal side as the individual. It's difficult to find the talented individual. And also, I think that one of the other problem here is also for small and medium firm to find a talented individual. The costs are very high because as we know, 80% of the population are expats. And if we want to find a specific talented person, we have to hire from outside. For a firm, like our firm is a small firm, if we want to hire someone from outside, we have to be facing, immigration, establish a card, we have to give the visa, we have to give the, the immigration fund, and the cost of like hiring this person without working with the person. Because normally sometimes in UK, in China, you all have the probationary. So you cannot have the probationary because you already got the person into the country. You cannot 6 months later say, okay, you're not the person I'm looking for, but you're going. And then we have the visa, then move the country. The cost is very high. So that's one of the very, hard for the firm to looking for talent people. So sometimes we just, stop looking, just looking inside the country. Even we couldn't find the perfect candidate, we will just do with what we can find. And the other side, Jeffrey mentioned about the education side, the training side. I think that's one of the in the sector in UAE is lacking at the moment. When I work in UK, like since I start working, this enormous amount of training you can get, and it is a huge sector which help you develop yourself during your working life. And in UAE, you will find that kind of you're on your own. There's not sufficient kind of, unless you go back to university. But most of the professionals, you don't really have time to go back to university. But I do find the pandemic has helped out a lot this year, because you find this booming online training courses going on in the market. I don't know any of you have noticed that. And all the universities start offering courses. You don't have the campus, you can do something online. And I think that's kind of really changing, like a milestone for our generation. Because now you no longer need to go back to university. You can actually find something you need online and you can do in your spare time. That is very, very good. And that will help the UAE market as well.
Oh, very interesting point. Thank you for bringing that up, Tal. So let me move on to another question. And this is for Winston. And the question is basically, how can the UAE attract talent, in particular in the new technologies such as artificial intelligence methods and so on? I would like to expand that question not only to the UAE. What a country or a city like Beijing, Shanghai, or Abu Dhabi, Dubai, what do they have to do to attract AI talent or create AI talent themselves?
Yeah, no, actually the answer may be a little counterintuitive, but I try to be kind of provocative here in the context of UAE. I would say when you look at the China situation, it's not the easiest thing to replicate. But once you make it work, it can really boom. What I mean by that is, if you look at the China's innovation ecosystem, at the center, the government support is obviously the important part of it. But at the center of the ecosystem is a generation of quote unquote graduated entrepreneurs, from the large, the first generation successful Chinese tech companies, like the Alibaba people, like the Tencent, right? You know, in some ways, it's not very different from Silicon Valley in the US. You know, it started with Intel gang, right? You know, the early people from Intel created a generation of semiconductor startups. And then you had the Google gang, right? The PayPal gang, those guys from Google, from PayPal, you know, created a generation of new startups in payment and the online e-commerce, so on and so forth. And obviously you can talk about the Facebook gang, etc. Right? But in China, it's very obvious. You know, in China, it's very obvious. You know, from the first generation internet giants, you know, you come up these graduated people, you know, from Alibaba, Tencent, Baidu, you know, these days Xiaomi, etc. Right? You know, these guys. When they set up new startups, right? They can talk to their early companies as an ecosystem partner. You know, they may get seed investment from their companies even before they officially leave, right? And when they start companies, they also attract the young talents to work with them in their startups. And the VC guys will put money to back these people, you know. It's not like you and me just walk out of NYU say we're gonna do an AI company, right? It's a different story. So I think, you know, really, you know, the challenge for UAE is to create this first generation successful entrepreneurs, and we start seeing some of the efforts at NYU AD because I guess 2-3 years ago, just before pandemic, you know, one year I was a keynote speaker at the Start AD, right? It's also a joint event by NYU AD and Moderator, etc. And I was kind of part of the judge team, what have you, you know, for the startup competition, you know. And so I think, you know, like this and I mentioned about Hub 71 AD. So this ecosystem is gradually like popping up, and I think soon you will get to the tipping point to see this first generation, let's say unicorns or mini unicorns. And from there, like you will see this ecosystem kind of booming. Yeah. So right now we need to help those people succeed. Yeah.
Very interesting. So for those of you who are connected to NYU Abu Dhabi, go and engage with Start AD. That's probably one clear thing that you can do from the beginning. Oh, excellent. I only have one more question, and it's, you know, it's for we only have 3 minutes, so it's going to be a 40-second thought about what is going to be your forecast of the UAE economy. In a very summarized, of course, we economists like to forecast, but when we realize that we want to forecast, we don't know anything about what's going to happen. So that's why we keep it short and precise. Short and broad. That's the opposite. So 40 seconds, what would be your forecast of the UAE economy in the next 5, 10, and 15 years? You can talk about this with respect to China, of course. And I'm going to start with Winston, because I'm going to go back the cycle.
All right. So no, I'm very bullish on UAE. You know, like literally, like my last international trip was December 2019. You know, that's the latest I could do, and that was, you know, I was part of the trip was in AD. You know, I was speaking at the Anthony Scaramucci's Skybridge, you know, assault conference AD, and it was sponsored by Moderator. To me, you know, that was very, very indicative of the forward thinking of the UAE government, the UAE investors. So with this momentum, I would think, you know, UAE is really, you know, set itself to be the hub, the innovation hub, the financial hub, you know, everything hub for the Middle East. But its main competitor is Saudi Arabia, right? PIF, you know, the similar sovereign fund is doing very similar things like Moderator, try to make Saudi Arabia the innovation hub. So I think the competition is on.
Yeah, that's very interesting. Excellent. Now I have Jeffrey and then Tao. What are your forecasts, Jeffrey, Tao, and I'm going to end with Bernardo's forecast.
I think I have the same opinion like Winston, quite bullish when it comes to UAE economy. And then there's no doubt that UAE economy is quite driven by the state-owned enterprise. and then a government initiative, and then a government spending, etc. So when we look into the government's initiative towards the diversification of the economy itself, we see a lot of investment has been put into different areas, trying to get a momentum from that area. So in the next 5 to 10 years, we will see the manufacturing start popping up rather than the traditionally quite focus on the logistic hub, etc. There was, yes, logistic hub will continue to be one of the important elements. However, the manufacturing bit will start to play the role, as there are many money has been put into this area. And then we see the efforts to diversify the business or the economy from the oil dependency, etc. So I have that similar feeling. The UAE economy gonna go in that way. And then one latest update, the UAE property market starts to recover, and then we see a very positive trend when it comes to this development.
Excellent, thank you, Jeffrey. Tao, the 40 seconds.
Okay, I have very positive view of UAE economy, growth. It has done very well in pandemic, and the government seems have good control of everything, and they have a really good vision. And with we could benefit from China-US this tension, and become people will use us as a hub to do business here. Actually, I have a different view with the property market. The property market is probably the only sector I would be worried about this whole economic here. But I think in 5-10 years time, UAE economic definitely will be more diversified, and probably not, especially Dubai, not rely on tourists as much as they're doing today. Yeah.
Okay, thank you, Tao. Bernardo, what is your projection?
I'm totally in line. So I'm also super bullish. So if you think about, we have been talking about for about 45 minutes, and we never spent 1 minute in talking about COVID. So this means that the attitude is already beyond that. So it's already after the curve. So we have already left the COVID behind us. And this is an amazing result, because as just I was mentioning, we didn't really, so the country managed spectacularly the COVID crisis. And this is not just looking at the future, it's looking what is happening now as we speak. So I'm super bullish. I think that UAE proves and witnesses that the resource curse can be broken. So you can create a new economy out of oil. The UAE enters this the next year with 1.5 trillion of assets, with a low level of debt, with a quite well diversified economy. And so based on this, and we're not talking the future, we are talking about what the UAE is now, I think that we have to be very, very positive and optimistic that indeed UAE will be a center of gravity of future activity in the global south, and a gateway for investment and innovation and talent attractions. So I'm really very, very super bullish.
Thank you, Bernardo. So on that note, this was an amazing discussion. I learned a lot from you. There's optimism ahead. So all good things are happening, and I'm really fortunate to be sharing this screen with all of you. Thank you so much. And I will leave to the organizers now for them to close. Mia, please.
Yes, thank you so much to our panelists and our moderator for a great discussion.